Good morning to my students. This is Dr. George, and I'm recording my first module on investment management, and this is called The Power of Two. So, how are you there in China? I hope that you're doing okay and that everything is well with you. So, this is actually a module on investment management. And first, let's start off with something very close to our hearts, which is our own personal investment. All right. So, because we cannot understand corporate investment and all that if we don't look at it from our own perspective. I'm sure you guys uh, are more adept with money than I am. You know what I mean? There's a video where it shows, we Chinese people, we know more about money than most of the people in the world, they said. And he said in the video, he said that, we even have a god of money. Then come to think of it, in our own culture, we don't have that. All right. So I trust that you know more about this than I do. But needless to say, maybe I can share with you some of the things that we are doing back here in the Philippines, and maybe you learn a thing or two about how I view investment. By the way, this is not really entirely mine. This is an accumulation of all the things that I've learned in investment ever since I started being a banker in the 1990s. So I've been doing investment for a good 20 years, 25 years for that matter, right? When I was a banker, I started investing in our stock market. Before that, I already studied about investment using books. During those times, don't have yet the internet. It's just the start of the internet, but I keep on reading books. And then I bumped into this guy called Warren Edward Buffett. So it's the first time I'm gonna mention it in our class, but beware because I mention him a lot. He's for me one of the most, yes, one of the most, if not the most successful investor of all time. And I follow his teachings simply because for him, investment is not something like gambling or something like that. For him, investment is a serious job. It's a business. He has been an investor his entire life, and he rose from having $100 personal investment plus $10,000 from his friends, and he grew it to 100 million, no, sorry, $100 billion over the years, over the course of about 60, 70 years now, right? Returning about, on the average, 25, 26% every year. So if you look at that from that perspective alone, you will see how great the investment has become through the years. So without further ado, my name is George. You can just call me George or Sir George. Some of my students call me that. Um, I'm a PhD in management with LPU Batangas. So I'm also I also graduated in the same program as you are now having. So welcome to this class, and you are also my students in treasury management and controllership. So I hope you're doing all the modules there. This one is really something that I made for you guys. All right. So welcome to module one, which is the power of two. So let me start with an anecdote. One night, you can see here that I'm a 90s guy. I see the phone there. I'm sure you remember that. But if some of you are young, millennial kind of young, then maybe you will not remember this kind of phone. This, my dear children, is called the telephone. It used to be like that. We have it in our houses and all that. So one night, it's the 90s phone, right? One night your phone rang, and on the other side, the voice said, you won $1,440. So this is about 9,330 Chinese yuan, or about 72,700 Philippine peso today. Or if you are into Bitcoin, 0.032 Bitcoin every day. So imagine. So what does that entail you? So he said there are conditions. You're going to get that every day, but you cannot transfer it. That means you can't give it to another account. You cannot transfer it to another account, but you have to use everything up. at the end of the day, the account should have zero balance. So we are in the same time zone. So at the end of the day, GMT plus 8, zero balance. If at the end of the day it has at least 1 cent or one, point zero 0.01 CNY, then it stops. If yes, if it's zero balance, then another 1,440 US dollars will be given to you the next day. Same rules. So what will you do and what will you buy? Pause for a while and then just reflect. Pause this video and then reflect on yourself. What am I going to buy really? If you have not attended this investment class, of course, now maybe some of you will say, well, I will invest it, or maybe your business nature would tell you to, okay, I'm going to invest really, not because I'm attending your investment class, but really I will invest it. Well, if that's your answer, then that would be a good answer. You know what I mean? But a lot of people, especially the young people, the young people of this generation, or the younger generation, have different answers. I've questioned this through the years, and usually I get answers like I would, buy food every day for my friends. I'll buy clothes every day for my friends, bags, and cars. Maybe I'll go to the dealerships and just keep on, buying. I mean, you can't buy a whole car for that, right? So just put it as a down payment or something, and then the next day go to the bank and then pay it. So can buy a house. Not the entire house, but put equity on that, and several answers. I even have one student of mine said that he would hold a feast for the whole neighborhood. All right. And there's nothing wrong with those answers, except, after 3 days, the same guy or the same voice, uh, you know, uh, uh, contacted you again. Well, you heard the same voice, right? And then when you pick up the phone, you heard him say, "Oh, I'm sorry, Mr. So and so or Miss So and so. We made a mistake. That money does not belong to you. Two things. No, if the story is a sad story, then I'll have to tell you that you have to return everything. But I will not say that. What the stories ended with is that the guy said, "Okay, you can keep whatever you bought. Okay, if it's car, whatever. So just keep it. All right. But tomorrow I'll not give you anything anymore because it's not your money. Hey, right? So it's not proper that you get something that doesn't belong to you, right? So imagine if you have bought things that are non-essentials. Like if you bought food, then all this opportunity of a lifetime is gone already. In a matter of seconds. I mean, right then and there, it's gone. If you bought cars, right? Then on the third or fourth day, then you will not be able to make the payment, and the car doesn't belong to you anymore. Same with the house, right? So imagine if that happens to you, and a lot of people have that kind of predicament, especially here in the Philippines. There's the lottery, and it's a big thing here. A lot of people put their money in the lotto draws, and they want to earn the jackpot of the lotto. But what usually happens is that when they win the lottery, in a matter of 1 or 2 years, according to studies, they they simply just lose everything simply because they don't know how to handle money. So that is something that really bothers me as a person who is into investment. Because if you look at it, people complain a lot, especially here in our country, that they are poor, they don't have money and all that. But then when it comes to getting money, when they are given the chance to earn money, they squander everything away. You know, to which when I was young, I used to say the reason why God does not allow you to win the lotto draw is because you don't you don't know how to handle money. Of course, right now, I would say to my students, to my friends, that even if you win, a large sum of money today, it can be gone tomorrow if you don't know how to handle it, right? So think about that for a moment. So really, my story, my anecdote is a lesson on time, right? So the most extravagant of all expenses is the waste of time. You can invest time or you can waste time. Time is either spent or invested. My story is not about just the 1,440 US dollars, but go back to it a bit and then reflect. If it did happen to you 10 years ago or 20 years ago, what would you have bought with that amount of money? What if you win the 57.8 million worth, of Chinese yuan of our lotto jackpot? If you have that kind of money, right? What would you have bought with it? So a lot of people lose their winnings in a matter of months, simply because they don't know how to handle the money. My story is about investing. And as I said in the first line here, the most extravagant of all expenses is the waste of time. If you look at it, we also, all of us, regardless of race, color, religion, we all have 1,440, but not US dollars a day. It's 1,440 minutes a day. 24 hours times 60, 1,440 minutes a day. It's either you spend it, or invest it. Spend it by just doing nothing, watching Netflix, watching YouTube videos, whatever. Or you can invest it by learning something new, or spending some time to really be aware of your existence and be positive, be optimistic about everything that's happening around you, and trying to find opportunity. I really envy you guys. I just heard from one uh video. I think was it Jack Ma who mentioned that. But for you, the uh crisis, was it crisis? The word crisis in Chinese is a couple, like two words or something that says danger and at the same time opportunity. I don't know if that's correct. Just message me if if that thing is just a story in videos. But I heard that from one video. I don't know if it was Jack Ma who mentioned that, but if it is true, then that's kind of a culture that I want us Filipinos to also have. If you look at everything that's happening around you, even if it's a crisis, situation, then it's always an opportunity for something huge, even more huge, to happen. So we have to think about that. So when you were young, I hope that we are not this, but during my younger years, my friends and I, we would just play in the fields with football and basketball, or anything at all. We have all the time in the world. We have all the energy in the world. When you come home, you even have time to play basketball in the yard, or monkey around with your dad or your younger brother. We have all the energy in the world. We don't have money, but we're very happy. So I'm presenting to you this so-called human life stages of mine. As a child, you have all the energy in the world. You have no money. You have all the time in the world. As a student, maybe college student, university student, then lesser energy, because you're doing a lot of things in school, even during pandemic. You have so less, time. You still don't have money. Well, you get money is if you're a scholar, here in the Philippines, of course, I'm talking about that. If you are an student assistant, or if you get money from your parents, right? As an executive, as a worker, as an employee, then you have so less energy. Like, even for me, after I come home from work, I used to to hang around with friends and have bars, as a youngster, in the 90s. But now no more. After I take off from the office, I would just slide down, maybe scroll some, news in my feeds in my Facebook, and watch some short Netflix video or movie, which I usually finish in, I don't know, a week's time. And then I just doze to sleep, and then wake up 2 a.m. or 3 a.m., and then sleep some more, and then go back to work. That's the whole energy, plethora of energy that I have as an executive. Money, yeah, you have money. Maybe not enough to for you to retire, but or to stop working. But yeah, we have money. But yeah, time, nothing. As a retiree, you have all the money in the world, you have all the time in the world, but you don't have the energy. I used to taunt my grandmother, my lola, in Filipino, call them lola. Uh, why is lola? I usually ask my dad, why is lola always reading the holy book, the Bible? To which my father was really, always monkeying around. He would say, just forget about your lola, because she's going to die soon. So she's trying to be closer to God. To which, it's a joke, but then come to think of it, I kind of get sad, because why is it that it's only up to the last time, the last moments of your life, that you start to appreciate all the time that you squander as a young person, no? So my take on this is that you have to strive harder in order to be able to retire early, right? um, yeah, so you have to put aside something in order for you to be able to retire early, and you can't do that with just working and working. You just have to put investment, something there, right? So point of recall, there are variables of success. Of course, energy. You should have energy. If not, then you won't be successful, right? You should have money. Yes, you have to have some form of money in order to earn money for nanny. Of course, as an employee, sometimes the money is limited, and you have to put aside something for your health, for your food, your daily expenses. But then you should have something put aside for worthwhile activity like investing. Of course, time is a variable of success, and we have to add information, right? Now is the time. We always tell this to our investors: don't put off until tomorrow what you could have done yesterday, as Abraham Lincoln said. You have to start early in life. Time is the friend. If you're 20 years old now and you save 1 peso, that's about 13.13 CNY. Now, from this time forward, I would just calculate the peso equivalent to just about 10.10 CNY. So it's easier to compute. Okay, so every day since the day you were born, how much would you have today? So the answer comes out as about 730 CNY. All right, so 7,300 pesos. Of course, that's not enough. So what if we award an interest rate of 10%, compounded annually? It triples. It triples in value. It becomes 20,905, or about 2,000 and 90 2090 CNY. All right. So the whole point in this is that, left by itself without interest rate, then the value is so small, right? But it triples once you award interest rate. But what if you raise the 1 peso to 5 pesos? In 20 years time, it would be 104,526 pesos, or about 10,453 CNY. And this is the equivalent of only 5 pesos a day, or less than 2,000 a year, about 200 CNY a year. For a person earning, this is how much an average employee earns in the Philippines. If you're just starting, right, 22 years old maybe, 15,000 pesos a month. So that's about 1,500 CNY. Of course, a lot of people earn more than that. But if you just save 10% of that, that would already amount to 1,500 a month, or 18,000 a year, or about 1,800 CNY a year. So if you put that into the calculation, then you will have 1,030,000, or about 103,000 CNY in 20 years. Of which, we have to pause a while and just reflect on that. A lot of my students would say, "What, professor? But that's 20 years of my life. I've spent 20 years of my life saving, and I only get a million pesos, or 103,000 CNY." To which I always say, if you go around, just go around right now. I mean, of course, not you guys, though, but my students who are younger than you. Go around and ask them, if you are 20, do you have this kind of money on your own? Of course, they would say no. How can you, put 5 pesos a day as a child or as a baby, right? Of course, no one would do that, but maybe your parents would do that for you, right? So, if you go around, especially here in the Philippines, we are, a poorer country than China. There are people going to work. There are people struggling to go to work, riding buses. Even in the 90s, I saw that, riding buses, even if they are already beyond 60 years old. And when you ask them why you're still working, they will say, I'm still sending my apo, or my grandsons or granddaughters, to school. And it's kind of devastating and sad, because at this point in time, at 60, for example, you should have already stopped working. You should have already retired, and just travel, or maybe stay at home, and just enjoy whatever you have done in this life. But then, they cannot stop working, simply because they are unable to put aside something, a little something. So, that's really sad. And I know that most of our countrymen maybe are not able to do investing. But so this is like a call for all of us now. If you are able to put aside something from your salary, or from what you get every month from whatever you do, as a business owner, or as an employee, or as an owner of your own business, maybe you're a dentist, or a practitioner, then maybe you should put aside something, because this is just a simple example of how money grows if you do it. You put aside money regularly. Okay, so in summary, the greatest factors in building wealth are time, interest yield, and the amount of investment. For me, I dare say in that order. Time is very important. See, if you start earlier in life, then the investment is better as time proceeds. Even my personal idol, Warren Buffett, he accumulated most of his wealth. One of the top 10, I think, richest man in the world, wealthiest man in the world. I think ever since I I started looking at the Forbes list, is is always part of the top 10 Forbes richest billionaires, right? And he has accumulated 95% even of his wealth by the time he reached 60 years old. So from 60 to, I think he's 90 now, so 30 years, that's when he accumulated 95% of his wealth as an old person. So you have to really uh, live long and put your investment in a longer period of time. And then second is interest yield. Of course, the higher the interest yield, the higher your chances of putting more money in your investment. And amount of investment is really not that important, but if you start strongly, then of course that's already a start. But in the long run, you will see that the difference is really not that big. The biggest factor is time. Okay, the problem with us Filipinos is we don't save. And then I think majority of the people of the world are like that. We don't save, or we save only to spend afterwards. there's a sale going on in eBay or in Amazon or in our case, Lazada, Shopee, and I think they also get from Alibaba or something like that. So we save only to spend afterwards, because by the time it reaches December, then there's a lot of sale going on in December, and you are tempted to buy things that you don't really need. Okay, third, we save. Yes, we save. We have a lot of savings, but it's not investment. So we save, but it's only savings deposit. And there's a difference. Later on, we'll talk about that. Add, we don't understand the long term. And this is where the so called power of two comes in. And this is for us really to understand the value of long term. So the power of two. So this is really mainly for my students who are younger, but just pretend for a while that you are a young person, and here I am asking you, what if I ask you to clean my car promising a pay of 1 peso a day? So again, in your case, that's about 0.13 CNY. But wait, your pay doubles every day. So what if it's just 1 CNY? Just to make it interesting. Your pay doubles every day. So how much would you be earning on the second day? 2 CNY. So very good, right? On the fourth day, 8. Okay, so what about on the 30th day? What if you continue helping me clean my car for a month and my car is a dirty car? So how much will you pay be on the 30th consecutive day? A lot of a lot of my students are unable to answer this, but without calculating, I know you guys are good in math. Uh, how much would you have if you keep on doubling the pay, starting from 1 peso, 2 pesos, 4 pesos? How much more or less will you be getting in on the 30th consecutive day? Pause this video for a while and then try to answer it before playing it. Okay, so let me look at the computation. So the power of 2, from 1, 2 to 4, 8, 16, 32, 64. End of the 10th day, you have 512 pesos. End of the 20th day, I think it's about 500,000. End of the 30th day is about 500 million. So on the 31st day, you would have earned so I just, yeah, 524,000 on the 20th day. So on the 30th day, you have 536 million, and on the 31st day, you will have your first billion if you keep on doubling. So come to think of it, it the matter of investment is about doubling your money. So sometimes the doubling of money doesn't happen in a day. Of course, this is highly improbable, not impossible, but highly improbable, right? Very highly improbable. Okay, so but sometimes the power to applies in a month's time, right? Especially, I think when I started doing my forex trading, I kind of look at this as a benchmark. And usually, in a matter of weeks, in a matter of maybe 2 3 weeks, then you can see your money really doubling, right? But then the way to go about it is when it becomes bigger. Like for example, if you're already in your 10th doubling, from $1. Of course, this is not really uh, uh, a good example if you start with $1. No, so if you start with one yuan, you will have 512 yuans in the 10th doubling, no? And sometimes you suddenly remember, wow, I have already multiplied my money 512 times in just 10 weeks or something like that. So here you're tempted to withdraw some of the money because you are worried, what if it doesn't double anymore, right? So when you get something out of that, then the so-called snowball effect, the snowball becomes smaller, and it doesn't grow as big as you would have grown if you did not get anything from the snowball, right? So again, it applies here. So on the 18th doubling, you have 131,000 yuan, and you think to yourself, hey, that's already a big money. I can do a lot with that. Maybe I'll start a business. Maybe I buy something. I don't know. What can you buy with 131,000 yuan? Um, yeah, you can comment in your canvas LMS, right? So what can you buy with that? And you get, okay, I'll just get half of it, so I'll get 65,000 and throw in the rest. So you already got 65,000, and the next time it doubles, it's back to 131,000 again, right? So instead of getting to 262,000, because you already got half of already of the snowball, right? So, it's not really that perfect because a lot of people become afraid and they stop the doubling process. So if you are on a race to 1 million, just $1 million, and pretend that this is dollars this time. So you are actually, okay, so you are on a race to $1 million. So this is the 1 million. And you started with, I don't know, $65,000, or maybe just $8,000. So you started here, $8,000, and you wanted to raise it to $1 million, right? To be a millionaire. So in reality, you only have one, two, three, four, five, six, seven, seven doubling. So it's just seven doublings away. So if you can double your money seven times, then you'll reach already 1 million. So that's one way of looking at it. And if you look at it further, then you have to add 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 doublings. So from $8,000, if you put, if you wait some more and stop getting money first, and if you reach 17 times doubling, then you can convert your $8,000 to $1 billion. And that's the power of two. Of course, the way to go forward is, number one, you ask me, how do I double the money, right? You go to business, all right? You go to lending maybe, and then circulate the money and then make it come back and then double it again. You create something, manufacture something good, and you can sell it for 10 times the value. It's not only doubling, it's multiplying it by 10, right? Or you can put it in investment, and the doubling time, of course, if it is merely stock market with ups and downs that's happening now, then maybe you distrust the market, right? But imagine if it goes very low, and then you buy everything at that low point, and in a matter of 1 2 years, it becomes, it goes back to the original time, before the pandemic. It becomes times three, times four already in a matter of 2 years. Then you will see that you've already jumped so much. You have already jumped the hurdle so much that you're already at such a position that you would have waited for, I don't know, 4 years. And it happened only in 1 or 2 years. It happened to me in 2008, during the time of the financial crisis. It just so happened that I have much resources at that time, so bought everything at the lowest point, and you saw the growth, the magnificent growth of the investment in a matter of 4, 5, 6 years time, and it multiplied itself more than 10 times, especially in my end, especially since you bought really low, all right? So if you have to stick around and look at all the anomalies, I always tell that. Some people would say, you keep on saying that you have to wait for a while. You have to wait because the investment horizon is so um, uh, long. And people would start complaining. My students would say, sir, it's so uh, painful to wait for what you're saying. And in a matter of 2 years, 3 years, they start getting already their money, and then they say, oh, I'm not good with stock market, I'm not good with investment. And I always tell them, The reason why you don't discover what I'm saying is because you don't wait long enough for the anomaly to happen. The anomaly, if you watch Matrix, it's the thing. Neo is the anomaly, right, in Matrix. And when something like pandemic hits, or financial crisis, or World Trade Center bombing 2001, right? It hits you like, like a heavyweight boxer on the face. You fall down, right? But if you have the resources, especially at that time, cash is king, right? You know what to do. Okay, your investments start hurting 20%. You get everything out first, and then it settles down to sometimes 50%, 60% down, right? And everyone is already selling their investments. And as Warren Buffett said, when there's blood on the street, then that's the time to buy, right? So you bought everything at that low price. You see, it will start to double and quadruple in a matter of weeks, even, or even just a few months. So if you stick around long enough for the anomaly to happen, then you get a lot of comeback, a lot of return. Okay, let's continue. Just a few slides to go. Yeah, here I talk about the difference between today. Okay, if you are here today and 50 years later, you see this presentation is usually for the kids. But even if we are already adults, it still it's still appropriate for us, right? So the difference between today and 50 years from now, or in our case maybe 20, 30 years from now, the difference is just a small 1 degree turn. If you start changing whatever your outlook in life is, turn this way, right, to the right, you will see that the hypotenuse is longer, right? It's longer, and in 50 years time, you will see the length, the distance, the great distance between you and all of your friends that just managed to walk this way. If you just turned a bit to the right, maybe one degree, maybe 2 degrees, maybe 25 degrees, you will see how long the hypotenuse becomes, and you will see that difference increases as time increases. And then when you guys reach an age of 80 or 85 years old, then you see the a lot of people say, how come he's that rich? We started in school together. We studied the same investment class. How come he's that rich? Maybe because he really applied whatever he learned in school. Okay, so this is really some just highlight on the market here in the Philippines. Of course, it's not applicable to you guys, but in the Philippines we have the Philippine Consumer Index. This is the rate of increase of our prices. So only 6.6% in the last 24 years. I don't know if it's the same with you, but maybe you can also look at that in your economics class. What I'm trying to show here is that here in the Philippine Consumer Index, it increases at about 6.6% last 24 years, 8.59% since 1990s, and but the PSEI since to 1986 to 2014 is 11% per annum. At 2021, this is 11% per annum. So you compare that to 6.6, and then you have 11 last plus 7 last 35 years, 11%. It's still a lot, right? So meaning, no matter what the consequence is in the market, no matter what the predicament in the market, no matter the anomaly in the market, in the long run, and that term in the long run is an economic term. In the long run, you will see that the market always corrects itself, and it's always better if you stay invested. If you stay invested, then you get the full benefit of your investment. So this is in the US. You see, if you started $1, then that's 12,900 for small company stocks, that's the index. Imagine your money increases by 13,000 times. Or large company stocks, about 2,400 times if you start investing in 1925. 1925 is the pre-depression years of the US. And of course, it settles down. If you look at this, right, in 1929, it increases to a level wherein almost the majority of the world stock indices already closed, and they started going to the US because that's where the money is. And then it fell to a deep dive, and I think it you have to wait for many years before you reach that level again, the 1929 level, the high level in October of 1929. But even if this happened to you, right? Even if this happened to you, eventually you will be rewarded if you waited long enough again for the anomaly to happen. Of course, some people say, but you cannot, you won't be able to live that long, right? But some people do live that long. And of course, being patient is also correlated to a long life. You know that, right? Did you know that just recently I read about, in the book, I read that animals, they realize that some animals, or was it majority of the animals, scientists are amazed that there seems to be like um target or a maximum heartbeats, you know about 100 billion for animals. So when I read that, my understanding, my insight is, okay, so those animals that whose hearts are always beating fast, like rats, maybe the smaller animals, they live very short because you're only allocated 100 billion heartbeats, and since you've already used that up in a short period of time, then dead you go, right? For humans, of course, it's not 100 billion heartbeats only, but if you apply that to human being of the same, mammalian species, or being the same, we're also, rational animals, you will see that if you are human and your heart is always racing fast and always excited, always troubled, you tend to live shorter. As one of my friends, he's a Persian, in my office, would say, life is short, don't make it shorter. Okay, right. So that's his idea. Okay, just four slides to go. So relationship between investment risk and investment rate of return. So if a person tells you you have a high return, but it's only low risk, I'll give you 80% return every week. That's a scam. Of course, it's a scam. Even the biggest banks in the world can't do that. And how do you manage to do that for me? Either you are operating an illegal scheme or something, or it's a pyramid scheme. So please remember that high return, low risk, that's a scam. Low return, low risk, that's reality. High return, high risk, like stocks, Bitcoin, Forex, that's reality. Low return, high risk, that's nonsensible, or being ignorant. If I send you to the place of the terrorist and tell you I'll pay you 300 yuan, would you agree? Of course not. Because if you say yes, then that's being ignorant. Yeah, that's high risk, and you only get 300 yuan, right? Kiyosaki way, if you've heard about Robert Kiyosaki, the author of the cash flow quadrant. So he said that as an employee, you have a job, or as self-employed, you own a job, like a doctor or a lawyer, right? But well, not a bad thing, but the limitation of this is that if you're absent from work, or if you take a vacation to Europe or to China, or if you're in China, you take a vacation to the US or whatever, then your business stops, or your office doesn't have patients because you are here. you are in somewhere else, or if you're an employee, you don't get to work, then of course your if you don't have leaves anymore, then you can't work anymore, so you don't get paid. So it stops already. But as a business owner, you own a system. This is McDonald's. In the Philippines, it's Jollibee, owned by Tony Tan Kakchong, Filipino Chinese. So he owns a system. Even if he wakes up at 11 a.m. or 12 noon, then I'm sure someone else opens his business for him. I think Ray Kroc is the one who first started the franchising business with McDonald's, or maybe maybe someone else did, but Ray Kroc popularized it with McDonald's. So being a business owner, the best thing, as Kiyosaki said, is from here on the left side you move to being a business owner. You own a system and the people work for you, and then whatever you get, the cash flow that you get here, you invest and convert it to cash. Like cash, begets more cash, right? So money works for you, and this is the caricature of Warren Buffett himself. All right. So, but in this class, in this course, and I think Warren Buffett manifested that in his life. He started as he didn't even start as an employee. He started as an investor from the beginning of his career. He never worked for somebody else. So he started as an investor in the 1950s, and up to now, he is an investor, right? So, or for us, for me, I would be an employee and then going to an investor, because you can take your investment, look at your investment as a capital or equity of your business, and you will see the return of investment. The good thing about the investment in in investment is that, unlike starting a business, like for example, I'm here in the office. If you start a business this big, you cannot just fold up. Tomorrow I'll say, okay, I'll fold this business up, I'll sell everything, and then I'll go to, I don't know, to Mars, or I'll go with Elon to wherever. You can't do that, right? You can't just sell everything, because no one will buy it, and you cannot reduce it to cash immediately. If you do that, maybe you'll put a discount on most of the assets, the hard assets, and you don't get the exact money that you want it to be selling for, right? So in investment, of course, as long as the stock market is open, or the dealing system is open, or the forex trading is open, or the Bitcoin and the cryptocurrencies chart is open, then you can transact your business. And if you see there, okay, my portfolio is 2 million, then it's 2 million. If I sell it, maybe you will have a discounted selling price, because of the charges, and because of the commissions, and the doc stamps of the stock trading place, right? The stock market. But it will go to about maybe 1.9 million, or 950, or 1.9 million, or even the worst is about 1.8 million, right? 20% off. But still, you get your money right away, right then and there. Unlike in business, if I used to know of a certain restaurant here in the Philippines, in the 1990s, it was very successful. It was in the one of the places in Manila. It's the heart of the Philippines, in Manila. And what happened was, one of the other another company, a big company, that runs the pipeline, the oil pipeline that is buried underneath, goes to the Manila depot, oil depot, and it goes straight 222 kilometers towards Batangas. It's a place about 50, 60 kilometers, to the south. And it's a long route, right? And it just so happened that there was found a leak in the pipeline. and it was hit by, I don't know, like government works, um, and it hit the pipeline, and so there was some oil leak, and because of that, the surrounding neighborhood in one place there in Manila got uh, so devastated. Their business collapsed because people have to move. Even the building where there's housing settlements have to move. There was a KFC in that place. I remember that because I used to eat there. And I think I during that time when it happened, I started thinking to myself, what happened to the owner of that business? You cannot just remove, the building that you've already started there, right? If it's just a lease place, you can easily move to somewhere else. But if you own the building, what will happen to you? I mean, you own that place. So for a long time, uh, that building, that business wasn't able to collect again the investment. Of course, some people will say, well, that's business, 50-50, right? 50% you win, 50% you lose. But if you look at investment, you only look at the businesses that will do well, and you choose the businesses that will do well even in recession, even in pandemic. You can allocate your portfolio at the fly. If you look at the way that it happened in the 2020 pandemic, that pharmaceutical company will never go wrong. Then maybe you reallocate your real estate, sell everything, move to the pharmaceutical. It's like a portfolio of sorts. If you're familiar with the Boston Consulting Group, like a portfolio, you move all your your money around and look at cash cows, look at stars, the question marks and dogs. Then you have to stick it out of the way and just remove it from your investment portfolio, right? So that's the way investment works, and that's what investment investors do. Yeah, even during pandemic, even during low times. So this is what Kiyosaki mentioned in his cash flow quadrant.